Welcome back to another episode of Market Watch. Today we will be mainly discussing about the current developments in money market and foreign exchange market, and also its impact on macroeconomic variables. We have witnessed recent developments, interesting developments with regard to the key cogwheels of the overall economy. Recently the treasury yields, last 4 auctions we have noticed a downtrend in the overall treasury yields as well as the AWPLR. And another major development is the recent $1.5 billion sovereign bond issue. Also, we witnessed during last few weeks, a gradual increase in foreign holding on government securities. And we know another expectation is the currency to further depreciate. Amidst these conditions, last month we have witnessed the USD LKR stable situation. Within all these contexts, we also should keep in mind that another rate hike from the US can have an overall global impact on interest rates. So, for today's show, Shashika Ranasinghe will be joining us to give an in-depth view on these developments. Shashika is the head of treasury of Cargill's Bank Limited. Welcome back, Shashika, and we are so pleased to have you today with us.
Thank you, Shadir.
So, Shashika, considering all this, can you tell us what is the current status on money market liquidity and how CBSL intervention, central bank's intervention these days?
Liquidity in the market has overall been negative during the year, but in April, late April up to now has been positive. In between there has been negatives, but overall over the last 1.5 months liquidity has been positive. Reason for that was mainly the couple of bond auctions were rejected, and also the sovereign bond issue. So that brought in quite a lot of liquidity. The market is overall plus. Now yesterday it was almost squared, just a small negative of 200 million. Now the market being negative is both good and bad. On one side we have the main concern is that private sector consumption led credit growth is growing, which has to be curtailed. That is on one hand, and the other hand, if the economy is growing, it's expected to grow at 4.7% this year.
That's right.
Liquidity in the market will help the economy leverage. Now, when the economy leverages, it is good because it helps the economy expand beyond organic growth. But on the downside, if the leverage is used for consumption, then there is a problem. Funding is going to be an issue. So liquidity drying up a little bit is good. It's not gone out of hand, so that inflation will always remain under control. So central bank has been very prudent in managing the liquidity.
Interesting.
Yes, and interest rates of course have been ranging, call money rates have been around 8.75. It fell down to about 8.60 when liquidity was the market was very liquid, but overall on average 8.75, both repo as well as call money.
Shashika, can you tell about the direction of government treasury yields?
Yes, at the beginning of the year interest rates were picking up. Yields started going up until from December up to around end April, and no sooner the news about the sovereign bond issue and the SLDB issue came out, yields started dipping. Initially dropped quite drastically, but now has stabilized and coming down quietly. If you look at the graph, you will see that after April yields have been dropping. Now the main reason was the sovereign bond issue. Its yield came at 6.2%. That was the 10-year yield in dollars at 6.2%. Now this came much lower than the previous issue. The last issue came at, it was done in July, 6.8%. So this is a good 60% basis points less, which is good. That is in spite of LIBOR increasing, our cost of funds have reduced. So this is long-term money, 10-year dollars, 1.5 billion raised at very good yields, which helped the market interest rates to come down. So the pressure on interest rates fell as a result of the sovereign bond issue.
Okay. Kashik, also since March 2017, we have witnessed the policy rates are constant.
Yes.
So, what is the latest development from monetary policy and of CBSL, and what is the expectation for the rest of 2017?
My gut feeling is we will be following whatever happens in US. So in March there was a 0.25% hike in US.
Okay.
So that was followed by a 0.25% hike in locally. Now US is expected to hike at least twice this year.
Another more 2 rate.
Yes, there is another meeting, FOMC meeting coming up next week on the 14th.
Yeah.
Probably no change.
Okay.
So ours also, I don't think there will be a change.
So you expect from the US side no change for during the next
Yes.
FOMC meeting? Okay.
Not this time because overall jobs data have not been that good.
Okay.
So they will wait for better figures before they hike.
Also, Shashika, what do you think about the market interest rates? Where they are heading right now?
We should see Sri Lankan interest rates going up in line with US interest rates. So if US hikes by has 2 0.25% hikes,
Okay.
Sri Lanka also will hike by 0.25% twice. That will probably happen during the second half of the year.
So we can expect some further pressure on the interest rates.
Yes.
Also, Shashika, what would be your idea on market interest rates? Where it's heading right now?
Treasury bill yields have been coming off, as I said, from the end of April. Even yesterday's auction, interestingly, the longer end of the curve came off more than the short end. 3 months and 6 months came down by 1 basis point, whereas the 1 year came down by 10 basis points, which is interesting. So
Yeah.
that's expected to bring down the entire yield curve. Interestingly, PLR has not gone up as much as Treasury bill yields have, and the highest was just before 12%. Since then, it has been coming down steadily.
Okay.
The latest is 11.40.
Okay.
We might see it dropping towards 11%.
11%.
Yes.
Okay. Also, Shashika, like when we spoke about all these interest rates, another major thing all would be focusing on the foreign exchange.
Yes.
So, from foreign exchange front, what would be the current developments, Shashika? Can you give us an idea on that also? And also, if you can highlight about the forward rate movements and the indications to this.
Spot is quoted at 152.50, but it is the spot next that is traded in the market actively.
Okay.
It's going at 153. So we have seen it moving by about 10 cents plus minus. So narrow range of 152.90 to 153. Very steady. But
That's
central bank has indicated that they'll be buying about $1.2 billion from the market to boost reserves. So that should keep the dollar well bid.
Okay.
For now, I see the bottom at around 152.80. That is spot next. And I don't see it going up drastically. But the only thing is, if interest rates continue to remain low, and if it drives demand, consumption-led demand, then there will be a lot of pressure for the rupee to weaken.
And what would be the idea on the forward rates?
Forward premiums have also increased because liquidity was tight for most part of this year. The 1 month premium is going at about rupee.
Okay.
Over the spot rate. So if interest rates go up further,
Yeah.
we might see the premiums increasing further.
So that would be the expectation, the interest rates to go up.
Yes.
So we can expect the premiums to go up.
Yes. Unless liquidity improves in the market.
Okay. Also, Shashika, we know there are restrictions on CBSL involvement on foreign exchange due to IMF conditions. So within this context, what level of involvement can be seen from central bank on forex market these days?
Central bank has publishing the spot rate, which is now at 152.50. They have been gradually increasing it. This is an all-time high.
Okay.
Other than that, they don't intervene a lot. Just a guidance to the market that the spot should be 152.50, but the spot is not traded.
Okay, that's interesting.
Yes.
So you say there's less intervention from the central bank currently?
Less intervention, and there's less liquidity in the spot market.
Okay.
Only the forwards are trading. Spot next and beyond.
Okay.
That's
So
1 day above spot.
Okay.
Yes.
So Shashika,
Interestingly, there is a 50 cents difference between the spot and the spot next. One day there is a 50 cents difference.
that's interesting.
Yes.
Okay. So Shashika, what is your overall view on the exchange rate in 2017? What would be your expectation?
Well, the sovereign bond issue was a very positive thing for us, along with the SLDB issues,
Yeah.
which were all very successful. So I don't see a lot of pressure coming on for the rupee to weaken. But only thing is now today it was really indicated that the trade deficit had widened to about 2.5 billion during the first quarter of the year.
Okay.
So if this trend continues, we will end up with a deficit of about 10 billion for the year, which is higher than last year. So there will be a lot of pressure for the exchange rate to appreciate, for the dollar to appreciate, that is.
Shashika, can you also highlight what would be the condition on reserves?
Central bank is very keen to boost reserves. They have indicated that reserves will end up at around 7.3 billion dollars by the end of the year, which is very positive.
Okay.
So if that is successful and they do it at a very reasonable cost, like what happened at the sovereign bond,
Okay.
It should help preserve reserves and keep interest rates under control. Also, the development with GSP Plus is going to be interesting. The immediate impact might be to increase exports, but having said that, it's not easy to build capacity and increase exports overnight. It will take a little time. There will be a lead time. So until that, we should also not depend on the traditional exports. We should try and diversify as much as possible. Diversify in terms of products as well as markets, and reduce our dependence on some of these niche markets. Perhaps we should not compete purely on price. We should look at other aspects as well, maybe quality.
Quality, that will be a major
And
concern.
yes, and alongside that, we should try and enhance our efficiencies. The recent turnout of events in Qatar.
Very interesting political turmoil.
Yes, that's going to be interesting. Too early to say exactly what the impact is going to be, but if there is an impact on the migrant workers there, again we are going to run into issues. Also the damage caused by the floods.
Yeah, that's right.
That is also going to be another concern. So our reserves will depend a lot on these factors. Overall, I don't see a lot of pressure on the reserves. The central bank has been managing it quite well.
Quite well. Anyway, these recent uncertainties are giving unexpected pressure on.
Exactly.
For our beloved viewers, we will see you soon with another exciting episode. Until then, take care.